Welcome to another live trading session, traders, for this nearly to end of the week, and also we are progressing towards the end of the month. And this is an exclusive live session from FOREX Trading XAUUSD Academy, looking at this market structure to see that how we can find trading opportunity in this session in the volatile market. We will be first of all looking at the analysis. We will be looking at multiple time frame analysis to see that where the market is heading, and once we can see the market has given us that suitable entry opportunity after this multiple time frame analysis, also we will be looking at the fundamental as well as the sentiment, how the market might be doing here in that market. So let's see where the market is heading back, and based on that we will be looking at the entry opportunity here in that market. And in the meantime, traders, I hope that you guys are ready for another trading day. It's Thursday, beginning of increased volatility for today as on Thursday, and we are looking at here pretty big pack to it. Quite a few news coming later today. Also we'll be looking to see that unemployment claims coming in an hour from this time, and either before or after we will be looking at entry. This is the dollar index news coming for this week, the last news, the red folder. Along with also we have some breaking news earlier that has shown a significant move in the market. So let's begin today's analysis, and just waiting for all the members to show up. How are you? I'm good, thank you very much. Hey, nice to meet you again. Thank you very much. So let's look at first of all here to see that what kind of market structure we can look at. We will be looking at, as I mentioned earlier, from three important perspectives in the market. Okay, so we will be looking at technical, fundamental, as well as the sentiment analysis. So in these three analysis that you will be looking at how the market is eventually building its momentum. So fundamental, sentiment, technical, and as well as the fundamental. These are the three blocks that I look at before opening any position. I believe that you guys also on the same boat. This is how trading is. We need to look at first the analysis before we look at the entry. We need the reason for the entry. That reason is very important. Reason is a higher, the higher energetic state when you look at reason, because most of our energy that we lose by confusion, doubt, worry, right? Where this come from? Because acting without reason. Now that will reduce if you have a reason. So in trading also, if you have a reason, that's gonna give you a better understanding of how the market is doing, and we have a reason for trading. Even if we didn't hit that trade, you still have a reason for trading, right? We will be also going in depth in our trading psychology part of this live session. Also we discuss about the trading psychology and how we can trade during those moments. So let's first look at here. Now I'm looking at the 4-hour chart. We will be also looking at the higher time frame. So if you look at the intraday perspective from 4-hour time here, and we had our previous live yesterday in that zone. Later we saw that there was a significant break below. After this NY session, the market has significantly melt down below here, and now it's potentially coming for another wave of drop. Unemployment claim after 1 hour, I think the gold will drop more before we can buy. Also the war, it's continue longer as the report today What do you think? This is what will be look at the in our sentiment part. I think there are quite a few the news has come out that we can look at to see that what might happen in terms of the war, and also it's significant for our trading decision, which we will be trading, and we'll be coming up with few breaking news and analyze it, and we'll be looking at for the sentiment in the market, which way in fact it is heading. All right, so let's take a cup of coffee, tea, or hot water or cold water and get ready for this. First time looking at the technical, okay, and then we'll be looking at also the fundamental. Then the technical, here I'm looking at the technical. Now technical is, this is a, from here it's daily bearish market, right? We have seen that there was a entire break below on this area with a one single move back down here. From the daily perspective, the market has created this downside movement here, and with this drop on the daily back to back 2 days, we have seen that pullback. Now we are on Thursday, we still have one more day on the Friday. Now in these 2 days pullback, what you can interpret here? Let's look at the, looking at the interpretation is very important. So if you look at this 2 days move that you can see from here, and with this move on the 2 days, what you can see that from this high here, the market has dropped, and that drop, if you look at from this high to this low, followed by 2 green candles. Now usually the health of the candles, right? The health of the candles will tell you what in fact overall the bull or bears move in the market. So if you look at the red candles, you can see that they are full body. Okay, so if you look at, they are red, okay, and full body red candlestick pattern. So with those full body red candlestick pattern showing that there has been stronger selling pressure in the market. And with this stronger selling pressure in the market, okay, so with this stronger selling pressure, the market is showing that there are more sellers in the market. And with this more seller in the market, the price action eventually could melt down, because look at 2 green candles, look at few red candles. Simple. Now the market is also trading below 10 EMA. So far we have seen that there is a downside momentum. So technically from the daily, we can say the market is bearish. Therefore, looking at the 4 hour here, we saw the drop. Now it's moving back for a potential pullback here, right? And that pullback is important, because with this pullback here that we are seeing, the market might be going back here potentially for another retest, and then to continue to trend back down. So the current level of resistance that we can see here, that the market is, if you look at the 4463, which is an important key level here, and that key level is important, that what we are looking at here in that market, where the price action is going back here and going to that level. All right, so going to that level where there is a, if you look at, there is a fair value gap. From the intraday perspective, it's a fair value gap. Now with that fair value gap, we are looking at this market eventually cross this high, fill that void, okay, and then to eventually return again back below in that market. So therefore, looking at this market structure, what we are looking at here in this market, the price action could go back up here. This is an entirely an imbalance here in that market, and going up can give us selling opportunity. So I'm looking at in this falling market from the technical that we are seeing that this market might be in a bearish momentum for that zone. So yesterday during the live session your bias was bullish, and I'm interested to learn what your rationale was for that when the market acts differently to what thought it's important to learn from. Okay, well, very good, thank you very much. And what I think, if you looked at throughout the session, as far as I remember, we discussed about the pullback, isn't it? So if you look at the 4 hour, I'm going to the 4 hour session because this is what we discuss in that zone. So let's look at this is the candle that we have traded during this live session, and we trade on lower time frame, right? If you guys looked at the trade that we have opened during this live session, I would like to review the past sessions trades, so you know that here what we have traded. So during this live session, you were trading in that area. If you guys looked at, the market has shown that momentum in that area. So if you look at the 4 hour, we saw that there was a bullish bias that has happened, and finally from that zone the market has created its move back below. Now we were trading on lower time frame, guys. Sometimes it might make you confused about the bullish and bearish, because if you look at the 1 minute here, okay, so you can see that in this zone it is in an uptrend, but when you're looking at the higher time frame, it is in a downtrend. But at the same time, the market behaved differently in different session. Okay, so you won't be able to exactly pinpoint at what direction the market is heading. Of this 2 4 hour candlestick pattern that you can see, the market has created this bullish momentum. Later you see the price has created that move. Now, as far as I remember, if we discuss that this candlestick pattern that we are talking about, here we discuss that if this candlestick pattern closing as a red bear candle, we could see downside. If this one is closing as a green bull candle, we could see upside. And the market has eventually closed as a bearish doji, and we saw that another doji later, the market is broken back below. So it's always conditional and subjective, but what we can see here at the moment that and we have successfully traded. If you guys looked at yesterday's sessions, NOI session trade, you have successfully traded, took profit, and back to back quite a few winning trades, except I had today one trade didn't work out during the London session. I'm looking at now to work out again. Now here in this area, if you look at this 4 hour price action, as the market has broken entirely back below, we are looking at in that area for the market to eventually, thanks for, no problem at all, you guys are good to hear that you are curious and remember all the details. This is where the learning comes, guys. Ask questions, okay, be curious, that's where you start to learn everything. So in that area here, that if you look at from this support level, this is where the market is this is the zone that we have seen the market has created its move back to the upside. And now from the technical aspect that we are looking at, in this market to eventually break that resistance line and then to give us a possible selling opportunity in that area. When there is no news in the Forex factory, and still if it's moved the market up, the market doesn't rely on only on news for the move, right? So it's also rely on sometime when there is no news, the market might move more, because the market more often wait for the high impact data, right? Once the data is, especially if you see that post NFP, post FOMC, the market makes massive move. So if you see that if there is a NFP or FOMC on Thursday, on Friday the market move like a crazy. All right, that's how the market moves. Then it is possible to come back to original price when there is no news. Yes, so original price means the level of support, right? This is what it is. Okay, going back to some other questions that I have in the beginning of this session. Unemployment is after 1 hour, and I think the gold will drop more before we can buy. Also, the war is continuing longer as the report today. What do you think? Okay, so let's see that this is another factors that the really market is moving with in Iran and Middle East war that we have seen that. Now Trump on Iran, they are in negotiations. Okay, so there are some this is 11 hours ago. An hour ago there is another news. Trump, the Iran negotiations are very different and strange. So this is 1 hour ago. There's a tweet. That means post on social, not tweet. Truth Social. So what was that here? The Iranian negotiators are very. So that might be factor here that you can look at. Right, so the Iranian negotiators are very different and strange. They are begging us to make a deal, which they should be doing since they have been militarily obliterated with zero chance of comeback, and yet they publicly state that they are only looking at our proposal. Wrong. They better get serious soon before it's too late, because once that happens there is no turning back. It wouldn't be pretty. Okay, so you said there was a post, and this is I would say that a feedback on how that previously we have seen. So, and here we saw the UN says it's reviewing a US ceasefire plan, but no talks. Trump said they just want to deal. Okay, and what you can see from some back and forth so far, you guys looked at. So quite a few back and forth, and I think that, do you think there is sign of slowing down in the war? This looks, so I don't see any clear sign yet. Do you guys see? Because both party has to say the same thing, right? Then that's a sign of slowdown. When they're saying a different thing, that means there is a disagreement, right? So one has to step down in that case. So which is that we can see what I think. Also there is a war. I think there might be going longer, at least so far. Then it is possible to come back to original. Is 4500 best area for sell as it act as a resistance in trend line. Still there is no sign for stopping. There is no sign. Even it's getting escalated, right? And So it's getting escalated. Usually, if you look at, there was Russia-Ukraine war started in 2022. It's getting escalated. So unless it's sometime, future is very unpredictable, right? If you look at the history, from thousands of years, in war, usually more often it ends with very, very differently. Less, I can't remember any war that has ended without being, war started and then negotiation, the war is ended through negotiation. That didn't happen, but what I can see here, this time is very different, right? And what's your thought on that? You can share. I think many of you already following many of the updates. Okay, still there is no, okay. Yep, that's what you can see. So the market is what you can see, that reflection of that what is happening. Usually what you can see, that gold is bearish. Now this time gold is bearish. Almost in all war we have seen that gold was significantly bullish, but this time gold is bearish. Is because this war has significantly influencing the energy market, which you probably have seen that, and that is bringing gold price for a deeper pullback. And now, so as a trader, we are looking at as we trade short term. So that's why most of our positions that we have open in sell. Okay, here is the market is coming down in that area. Still there is no sign. Okay. In the meantime, if you are enjoying the live session, make sure you like this stream. Did you do that? And also don't forget to subscribe to the channel. We will be looking for entry as soon as we find that possible entry. We have the news coming in, unemployment claims, and if the market create a strong false breakout level, we will be looking for the entry here in that market. Okay, so here is if you look at with this long wick, it's carrying the rejection in that area, and with the rejection the market is coming down here back below to this support level, where key level, and the market may eventually drop down here. So we might see the market to come down back below here to this support level. Now with this lower time frame market structure that you can see the market here, again I'm looking at the 4 hours support. We still have 2 hours for this candle to close, and of this 2 hours candle to close, the market may, if it tests this support, we might see that rejection back above here in that area. So the war has a direct, because the market is directly influenced by any kind of war or because mostly 2 things highly influence the market. One is war, the other one is the economic recession. If we see that, especially economic recession, not economic growth news influence the market less. more often, because the market is mostly driven by fear and greed. Okay, so economic recession brings a lot of fear and there is a panic buying, selling happen. So that's where, or the war. Okay, but this war, I think it might be in a short term. We could see that ending very soon, because being optimistic is the best way that you can live in, because this war is very different, right? I haven't seen war like that before, though I'm not a very 200 years older, but if you look at the history, this is a very different war, and that might be ending also differently, but depending on also other factors that is contributing. Okay, so here is an entire drop in that support level that we are looking at. This drop here, you can see it's a complete break of support from the intraday, and 1 hour candle close coming in 10 minutes. That's what we're looking at. This is the 1 hour price action, which is a bearish engulfer. The trend continues, so therefore we might see now a possible break below in that market. Thank you. Anything that you look at, there are two sides to everything. Remember, traders, there's two sides to everything. Do you know when was the highest number of technology being developed? When there was a technological revolution in the history of the mankind, from nearly to 1940 to, let's say, 1950, around that time period, was all the technology being developed in that time period. Which has progressed everything later in human civilization. If you look at some of the videos that footage shows, before 1940, the roads, the traffic system were very bad. The cars were very poor, and then later changed everything. United Nations also developed after 1945, I think 1950, right? So everything has two directional bias, like the bearish and bullish. But the thing is that looking at what we can take from there, and then moving forward. After the mud flood. Yeah. Okay, so here is, if you look at the 4 hour chart here, that we can see there is a narrow, smaller red candle, right? Which is a very smaller candlestick pattern. And then you can see the market is moving back to the upside here in that area. So the 1 hour price action is here. And this is where you can see the market is getting the rejection, and you could see the price to eventually break that low in that direction. Okay, so with this, if you look at the trend line here, this is a key level of trend line. The market has broken that low. You could see now breaking that below, and yeah, so we'll be waiting to see how the 1 hour candle close And if the 1 hour candle close in that direction here, we might see the market to break that low. Okay, with a big drop here, the market is pushing here back above, which is now an imbalance, and the market is going to hit that zone, and that's where you could see the price action breaking that low. Now here is the move followed by narrow pullback, another move, deeper pullback, and the market may eventually cross in that low. So there is a long week candlestick pattern being created, and the technically we are seeing that gold is showing that bearish, and you could see the market here after this deeper pullback, the market may eventually break that low in that area. Now with this narrow doji, we might see the market to break above, potentially to retest and then to return again back below, and that we might see the market to eventually cross that low. 1 hour candle closing in 2 minutes time from this, and you have seen the market has shown that rejection in that area, which could be the price to break below here in that zone. Ready for an entry? So if you watch the silver, it's down, and I think the gold will go top too. Can you please check? Maybe we still have more. They're like a cousin, silver and gold. So if silver is going down, gold is likely to go the same market structure that you can see, except silver has a little bit of stronger momentum. Yes, so it's a good way to know how the market is moving. Yes, so you can see that there is a bearish price action on both. Usually they are like a cousin. Okay, so if you see that gold is moving down, silver also start to move down. When you see that silver is moving down, gold also moving down. So this is a relationship they both had. Now with a bearish price action, we have 1 more minutes to go for this candlestick pattern to form, and the 1 hour market structure is pretty long bearish engulfer that you can see from the 1 hour perspective, and from the 4 hour chart we see the market has dropped. Now if this candlestick pattern is not here, I would look for sell, because the only risk here for sell is that with the 1 hour candle close, the market might try to break that high again, because it's on the low, and we don't want to oil going up. Okay, so we don't want to go to that in that area. So if you look at the oil, yeah, oil is up, and I was looking for an entry because oil, we saw that previously it was pretty up, and we see the DXY is moving up, and we can see the USD/JPY also I think moving up. Yes, so the both of them, all of them are moving back to the upside here. Now if you look at in that area here, so the candle close on the 1 hour and the market has tested the lower shadow. We can see the price is here in that area heading back below. Usually with this long wick candle, the market may eventually cross this low. I'm looking at, this is the 5 minutes bearish engulfer that you can see, and if we see the market has taken a new higher high, that means breaking that high, we will be looking for selling opportunity here in that market. So WTI has a strong bullish confluence. If you guys looked at, there was analysis also posted earlier, and in this WTI, the market is heading here back above. So there's a, if you look at here, is narrow long wick doji, which is an order block, and as the market has broken back below here, the chances for US oil to, or the Brent oil, both of them moving in the same direction, we could see that the market to eventually go ahead and fill that zone in that area. So that being here on gold, then normally this time we see there is an inverse relationship with oil and gold, and with that inverse relationship, the market is showing up that price action potentially to follow that pattern, right? So the 4-hour price action showing there is a bearish move, and I would like to keep the high of this intraday candlestick pattern as a level to see if the market is going back here to retest this high here, right? Which is very possible to do that if the market going to get again 4455. As the sentiment is bearish from the technical, going back up to test this neckline or going back any of this level, we will be looking for sell. This is our trading plan here on gold for this market to eventually cross this high and then to give us a possible entry opportunity in this market. It is possible to see one more bounce going back to 4-hour sessions high resistance line, and then to return again back in the direction of the trend. Usually false breakout happen like that, suddenly one single move and then to return. Some music on here, and then we will be jumping off that level. can see that moving potentially back here to that key level and then to return again back below. Okay, so you can see some short-term move that could take that market back 4432 or retesting that zone before it reverse again back in that direction here. So far here, we will be preparing for an entry as soon as we can find that suitable price action confirmation here in that area. Now, 1 hour candlestick pattern, if you look at, the market is trying to break this high here. Okay, so it's going to be pretty ambitious if we see the market is going straight back above this 1 hour high. Right, so if the market cross this high here, that's going to be interesting to see that this market again revisited that level. And if that happens, it's going to be a huge opportunity to sell again, because this market is showing its downside momentum in that area. It's gonna show with the price action. So if you look at here now, going to retest potentially 4432. If it creates an overextension here, which is potentially to be, and then showing up selling pressure, we will be looking to sell. This is the way the market moves. Because there was a channel that you can see. It was an ascending channel. And that channel was broken in that direction. And with this break of this channel, the market, you can see that it's going again for a retest. So that could be that it is eventually testing here channel and then coming down, or feeling that fair value gap and coming down. So it's interesting. It's going in that direction. Okay, this breakout I was expecting, and so if you look at here, the market now leaving a gap in that area. Okay, so it didn't retest this neckline. Now here, traders, what I'm going to do here, I will be targeting at this zone for if the market breaks below here, okay, it is less likely that the market will leave this gap open. We might see the price entirely dropping again for another retest. And that is where I will be using a pending order here below this candlestick pattern, a sell stop. Okay, so if the market breaks this low here, they're expecting it to extend below in that direction. All right, so we'll be using a sell stop here at 4437. So it's a sell stop order. If the market reject of this, we'll be entering into the trade. We have 15 minutes for the news to come up. This pending order will keep on for around 10 minutes. If the market triggers, we'll take, or we will be closing pending order and we'll be placing a new pending order. So place the pending order here before the news. If the market breaks below, when you get trigger here, and then we want to take this move back below. If the market doesn't drop here in the next 15 minutes or next 10 minutes, as there is a data coming, if you look at unemployment claims coming, that might bring that market well below here. I hope that makes sense to you guys. Let me know in the live chat, what do you think with this pending order? Because if the market breaks below, the chances for this price to drop down again to the support is higher. Strategy risk management, that's the key. Welcome. So at what level you looking for gold? This is what you look at 4437.68, which is our entry option. Find 1 minute RSI really useful for possible entries. 1 minute RSI. Only RSI, or you use some other confluences with the RSI, such as the divergence. Usually RSI overbought, oversold sometimes gives a confusing signal, because if you look at the RSI overbought, all right, then usually in a strongly trending market, it's gonna keep showing that it's overbought until it's going in a sideways. This is one thing. Another thing happen is that in the same way, if you see the strongly falling market, it's gonna keep showing RSI oversold until you get sideways for the market to revive. So the best signal comes on RSI, usually comes with divergence. Okay, we see that there is a break of this support. There might be coming down here, and my entry is there, the pending order, and I believe you guys also there. If the market triggers, this is a very tight stop loss that you can see, only 80 pip. So if the trade get triggered, just I'm letting you know guys earlier, because this is the 1 minute bearish engulf, the market might drop. And if it suddenly drop back below, as there is a news coming with around 50 pip, if it drops aggressively to that level, if we see that there's a chance for the news to come up, we'll be taking the profit. But before the news, in the next 8 minutes, that means if the trade doesn't, so we got triggered here, right? I got triggered and the trade is on. Okay, so there is a let's see that what's happening. It's a very tight entry. All right, so there is a tight entry. It's at entry the market, and this is interesting market structure. It will be surprising if the market again goes back up. Okay, coming down. Fair value gap. Coming down below our entry. I'll be happy to take around 40 pip even with this move as the news is coming. As soon as I'm closing, I give it a shout out. There is a 15-second for this candle to close. If it closes well below, I will be taking the profit. I'm out with the running profit. As the news coming, we will be re-entering again. It's a small move, only 25 pip. Let's begin as the news coming, and after the news we will be looking at entry. What's your bias? Do you mind to give a feedback? Profit taken, small one, but taken. How many PP you have taken? Can you share your number of pips here? Do you think it could break 440? There could be, as 10 minutes high impact news coming. I don't want to peep and dip. Thank you. How many peep? You can share your number of peeps. And if you have taken profit, one thing, guys, don't miss out to like this stream if you like that, and also join the Telegram. You can find link below this video. Here's every Sunday I'm organizing extended, thank you very much, extended Zoom session. Now the purpose of this Zoom session is to give you a one single session that I will be sharing all my secret tools that I use in trading. And from that Zoom session, if you're lucky enough, you might be able to get into the academy. So the link for the Zoom session will be given in the free Telegram, so you can join the Telegrams. You can find link below this video. Also, I'm sharing in this chat box. Here's the Telegram. You can find link below this video. And you can stay connected by joining there. And once you're on the Telegram, the timing for the Zoom session will be on Sunday, London time 11 a.m. NY time 7 a.m. Sydney Melbourne time 10 p.m. So this is gonna be, this one session might change your entire life. And in that Zoom session also there will be interactive, so you can ask live question directly with me using your mic. And at the end of the session, for those who will be dedicated to become a professional trader, will get also access my one-on-one mentorship, as well as the premium group entry where I'm sharing every trade that I'm using. So only this is the pathway that get into the academy. It's on Sunday, and if you are our member, also you will be able to access my trading system entirely as a part of the mentorship program. Okay, so now here what we are looking at in this area, from this zone, the market is quite a few long week candle. I closed earlier because there is a news coming, and we might see pretty increased volatility, unusual spike, and I don't want to get into the spike, okay, before anything happen. Let me know if you have any questions. Let's jump on to the next trade that we are looking at. So I'm looking at, again, this is the entry that you have taken, a quick move. Now I'd like to quickly go through the trade, why I have placed this pending order here. It's the first question, right? How should you know that this is where we should be able to place a pending order for an entry? Now, the reason I have placed a pending order, if you look at, there is a fair value gap here, right? Fair value gap means that this is an imbalance in the market. So how do you know the imbalance? If you look at here, you can see this is a red cell here that you can see in the past drop to that level, and the market has gone first to this zone here, right? So if you look at the left here, there is a sell and there is a buy, so it's an balanced zone, and the market has gone up, all right, created this green move, but when the market is here, it didn't come back here to fill that zone, right? So this is a fair value gap, right? FVG. Usually the market more often will come back here to fill those zones, because the overall trend that you can see in the past there was a massive drop. So the chances for this bigger move to come back again to fill that zone, and that is what we have taken in that move. Going to the news area here to see what is happening. We have few update here. Okay, so we looked at in the past, and here is another one came. Israeli military spokesperson, our mission right now is to further degrade Iranians' capabilities. We have many more targets left. Okay, so there are a few updates, and basically there is an update from the Israeli military spokesperson, and that means there are more so the breaking news coming. So if that is what is happening, you get prepared yourself for few more entries. Now when I am trading, guys, especially during this time of high volatility, you see that I always look at what is happening before we look at the entry, because suddenly there is a strong breakout or breakdown with the high impact news. Should break below tonight. Yep. So why do you think it should fill that zone? Okay. The reason it could fill that zone is because when you see that, look at where the market started its move. Now, for example, if the market from here move there and then move up to here and then drop, retested this resistance here, which is resistance turns support, okay, and then gone back up. So I would say, okay, this is a balanced market because it tested this resistance and support. But if you look at from here, it has gone up. Usually, if you have seen that, let's say here, you see there is a narrow red candle, the market has started to move from here. But there was a resistance here. If it created a doji here like this, that I would not think of coming down again anymore. It might be going up further. But if you look at the market start from here and this resistance, there is no retest of this resistance as a support. So chances for the market to fill some of this zone is higher. Usually when the market approach the fair value gap, it extend beyond, because look at this one, the same here, because there's a lot of order below this level. All those buyers, there is stop loss here, and that triggered their sell order. The market will slide back below here in that area. Now with those sell order, either smart money will sell to drop again, or there will have a slide with the sell order and the smart money will buy to go again. So in any way, there is a higher chance for a drop. I hope that makes sense. That means anytime if you look at a zone where there is a higher stop loss, the chances for the market to extend from that zone is higher, because those stop loss usually act as an order. So one is volunteer, the other one is non-volunteer, right? If you buy, you are voluntarily buying, but your stop loss is a non-volunteer entry. It's interesting. Here the market structure showing, we have 1 more minutes. So no problem at all. 1 more minutes. This is a potentially bearish price action. With 1 minute later, the data coming. Unemployment claims. Gold might potentially to drop. Let's see that. Anything can happen, but I think $210K. Okay, so it dropped that back below. So technically, it's showing that downside here in the day. How about the DXY? Has shown bounce with the positive data on unemployment claims. USDJPY, DXY, XAUUSD has dropped below and gone back again to the upside. We're waiting to see what kind of market structure is creating. I'd like to delete all those levels. There's a new price action been created. If you look at, this is what I was talking about when the market was here. Usually this kind of candle finds difficult to break. Especially the 1 hour market structure. This is interesting. What you can see here. Now, this 1 hour candle is crucial because this one is going up and crossing this, coming down, or without going up, closing back, below this level, we might see selling opportunity in this market, especially breaking this high. Gonna be pretty interesting sell zone here. Now this 4 hour candle, if this overall candlestick pattern goes up, break that high and close back, creating a long wick candle here, that's gonna be interesting selling zone here for this market. Now, false breakout is important to look at here for this market to go ahead and then to return. So we'll be happy to see the market is going up and then coming down. But how do you see this market structure being formed? See that. So what was up, now it's in down, right? Interesting. So what was the above? Now it's below. And because the market has, this is just a mirror here, we highly likely could see this price to break that lower shadow here. And if this trend line has broken above, that's gonna be an interesting sell zone here. So the trend here is bearish and I'm looking at sell. With a couple of long wick, especially I would like to keep eye on the 1 hour price action, because this is the time frame where we can see the market is creating its structure in that area. Okay, it's breaking out here, which is what I want to see. The market is going up to cross this high here. That will create a good entry criteria for this market. Okay, so of this support, the market is slowly breaking here to that level, and this is what I'm looking at in this market to show its momentum back to the upside here. going here, crossing that resistance line before it return back again below in that market. And breaking out is can bring potential price action confirmation here in the area. Ready for another entry? Say yes. If you're ready, make sure you keep the risk manager tool and also keep eye on your risk management. And I'm looking at here on the data again with the news upcoming, what is happening, and we have seen the data has really significantly influenced. DXY had a bounce, so we have seen that earlier DXY was bullish, and I think USD JPY has shown significantly upside here. And we had earlier one trade on USD JPY, which is showing that the market is bullish. USD JPY might be now, if you look at here, consolidation, and this is an all-time high. There is around 200 pip gap, I think so. Yeah, it's most likely to cross that zone. GBP USD and Euro USD slowly coming back below here, and DXY is what you can see that showing upside and WTI upside. So WTI might be going up further. So gold is manifesting on the other direction, right? Does anyone know the name of this piano piece? Okay, thank you. We have few positions opened. Now usually when I see this kind of trend line, so if you look at lower high, break of this high can bring new trading opportunity. So this is my now next plan. You know, more less is more in trading, guys. Keep in mind that here. So we'll be looking at a quality move again, and then the bias here later today, we could see that break below. Daily market, we can see that there is a significant drop that might bring that price back here in that area. Looking at that market to break above and then to return again below. Thank you. So the music name, I know that I can tell you. Instrumental version. Baha Bank. Big B. This one? No. few more clips to play. Now this is one after one side candlestick pattern. That's an interesting candlestick pattern that you can see. It is still bothers me. We haven't retested the week that form on Monday. I think we can see retest week, then impulse up to 4600 to 4700. So you mean that daily, right? What time frame? Yeah, I understand now. This one. Yeah. Usually, if you look at, see the, yeah, okay. Let me explain to you why that didn't happen. If you look at here, let me replay the chart. When you see the long wick, it's very important, guys and girls. When you see the long wick, always look at the body wick ratio. Is very important. If you see that the long wick is very effective when it creates usually smaller than body. So for example, look for comparatively larger body with a longer wick but smaller than body. That's a very high probability setup. So what actually this week represents, let's understand it. This week, there are two interpretations of this week here. One is this week is a rejection. The other one is it is a retracement or a pullback. So what a healthy market does is that it will have a bigger move, comparatively smaller pullback. Minimum is 38.2% or 50% is the best, or at max 61.8%. Otherwise, if you see that beyond that is basically considered as a reversal. So this week, if it is a pullback, it's a very healthy move, and you'll see the next one is straight coming down. Very high probability setup. So you can see that this candlestick pattern, bigger body, longer wick, but compared with the body is smaller. But if you look at the next one, this one, this very smaller body but larger wick. So this is, now if this one is a pullback, this is actually rejection candle. Okay, and that rejection will take time, and also you may not be fully recovered that rejection, because there will be weekly close coming, right? The market, if you look at here now from the daily, it's showing the downtrend. It might come possibly to cross this low, and there is a higher chance that either weekly close might be in between this, or you could see that again going back from this, and even you could see something like that from the daily coming here and then doing like that few days, okay, and then something like that can happen, okay, or going here again, creating series of lower high, creating series of higher low, few days, breaking out, and then coming down. This is also one possibility from the daily perspective. Now at the moment, therefore, from our trading approach, if we take any trade, then best place to close just above this green candle's low, because this zone is a red zone. It's a strong rejection, and the market might struggle to fall down from this to create a new lower low. It's possible because depending on how boldly it is dropping, depending on the breaking news, because there is already a stronger impulse here that might push the market back below. But the high probability zone here is this, because this is an imbalance here in the market. Okay, now we do 1 hour. This is a small trend line and looking at this market to break that high. It is creating here an interesting structure with a series of long wicks in this area from the 15 minutes. So in this way it might slowly break below, or you could see another move with as the hourly candle close coming. Now I'll be looking for with this hourly candle close, before the candle close, if we see that a break above to this 10 EMA could be an important zone that the market might be heading to. But with this 1 hour, if you look at from it rejected from this, right, but it didn't make a stronger effort to break that high. So that is a sign that the buyers are weaker here in this market. So here the market is after break of this low trying to move up. The market left here significant imbalance before the 1 hour close. So you're going to see another break, or you could see that continuation below here. So from this, the market is showing that there is a possibility for here downside move. This is the market is not strongly breaking below. So from the 1 hour, from the 1 minute chart, the market is trying to break this high here. There might be some pullback in this area. So I was looking especially the 1 hour price action, right? So this is a 1 hour candlestick pattern where there is a bearish engulfer, and if we look at the 4 hour here, also showing that there is a downside move. We have 1 more minutes before the 1 hour candle to close, where there might be here from here before the 4 hour close, 1 more rejection back above, breaking this 1 hour high, and then to continue to drop. This is a long head and shoulder, and I would say that this will be a good move if the market goes up again, though there is a break below with the 1 hour close. You can expect now a break up. Getting rejection of this with this liquidity gap, and okay, so what is our latest? The market is moving again, and with the current data, there is 210k the unemployment claims came out to be, and that unemployment claims that you can see here, which is showing bullish bias on the XY, WTI having I think some kind of pullback here, the XY is up, USD JPY also significantly up, gold is therefore down. Now 4-hour chart, this intraday candlestick pattern showing we have 1 hour to go. The market is showing that there is a bearish pressure here with this 1 hour candle close. Now before the candle close, we could see that here deeper pullback, and we'll see that. In the meantime, traders, I hope that you I hope that you are enjoying the session. So make sure you join the Telegram. You can find link below this video for joining if you want to get access to many of our trading education. Also, there is a premium Zoom session coming on Sunday where you can join for regular update. From that Zoom session, there will be interactive session where you can see how our strategy works and how you can find a better trading system. And from the Zoom session, few lucky winner will be able to get access to the premium program in the academy. So you can get access to that from the Zoom session. There's a timing also will be there, and also regular day-to-day trade update, as well as many other education that I'm sharing in the Telegram channel that you can get access to that. So we had one successful trade this session like we did our previous day, and I'm looking forward to have more. The only thing that need additional is being patient, right? That's the key. That's the key, guys. Now here is, we saw there is a pretty long wick candlestick pattern that you can see, and that long wick, which is a significantly longer candlestick pattern that you can see here. And with this big candlestick pattern, now this is the current trend line that you can see on the intraday, right? Lower time frame trend line. That's a massive, okay? Because now before this intraday candle close, before this 4-hour candle close, if we see a complete break of this trend line and then coming back below, then you can look at break of this support here. Okay, so now I'm waiting to see a while move back up to break that high so that we can look at to break this low. So it managed to break above here. So on the daily time frame, it's closely mirroring the structure that you can see back in December of the last year. On the daily time frame, it's closely mirroring the structure that you can see back in December. Let's see. I'm curious always. So this one, yeah. Yeah, so this move. I think it's on January, right? Or December. December is here. I would say it's more of January move. I think you mean this one, right? The red lines from the December last year. Delete those. Yeah, so this is what you can see. It's trying to mirror this part, isn't it? So this one, if you just flip it, you'll see this one, right? Something like that. At the bottom there is a smaller red candle. Here at the bottom there is a smaller green candlestick pattern. This one is this side, this one is this side. That's how we can mirror that part, but you know, the market does usually. And the best part to look at is just the immediate zone. That will give you better clarity, because if you look at here, it's a pretty long consolidation, right? And trading in this zone is sometimes very hard because it's a very solid consolidation. But yeah, usually from if you look at the same way here also, right, in October, and then it did the same kind of move in December here, and then bigger one here in January and February. So this one, January to February, you see this move on February when the oil started to bounce back up. When oil started to pick up, that time this move happened, that massive drop, and the market pulled back. Now again oil going up, and we can see that in fact gold is moving in that direction. Okay. Now, yeah, so it's getting up now in that area. Gold like to form symmetrical patterns. Yeah, because this is a very highly traded instrument. Okay, XAUUSD gold is highly traded instrument, and you can trade on 1 minute very easily. The market structure is very predictable because any instrument that you can trade on 1 minute, gold, euro, dollar, British pound, USD, or USD, JPY, all of them, but gold is easy to trade on 1 minute if you know proper risk management. And any instrument that you can trade on 1 minute, it's a very good instrument to trade, because in 1 minute, if you're a day trader, you spend 3 hours, 4 hours in front of the chart, you will find a lot of move. Finding a move is very important. If you look at such as the minor pairs, you can't trade lower than 4 hours. It's very difficult. At lowest, sometimes you can trade on 1 hour. So if you look at some minor pairs such as AUD and CD, or if you look at EuroCAD, okay, so look at the EuroCAD. To find a move, you need to wait a lot. So there was a massive consolidation here, and you need to wait almost 2-3 days to find a move. So it's difficult to find a move in the minor pairs. In that case, you have to watch a lot of pairs. So if you are trading on 4 hour, probably the best way is to look at to trade. I used to trade all of them, even USD JAR, EuroCAD, and ZDCHF, and ZDCAD, USD USD, everything, Aussie yen, when I was swing trader. Okay, but with day trading is simple. You have one instrument you can look at, or you can look at few of them, and then trading on one is much easier because you have all the support and resistance. You don't have to do the many times analysis. For example, when you're looking at gold now, this is 1 minute chart, but by closing our eyes, we know that this is the 4 hour resistance. The daily chart is bearish. The market is having a strong rejection on the daily on Monday. So we know everything about this instrument. Okay, and that the timing, the news, how this pair or this metal behave with other news and instrument. So it's easy to trade if you trade on one. And to trade on one, let's say you trade one, but you trade on 4 hour, you're not gonna be able to trade again, because trade on higher time frame or even 1 hour, you barely find 2 to 3 trades in a week. It should not be enough unless you have a over $1 million account. So that's where the thing is. But trading on 1 minute, you find a lot of trade, but the only thing that you need to make sure in 1 minute chart to use proper risk manager tool, and then trade based on strategy. And this is what I teach. If you join on Mondays, Sundays Zoom session, link will be in the free Telegram. That's what I will be showing you in 1 hour how to trade on in using on the lower time frame while we are trading here. Also, don't miss out that link of this free Telegram channel that you can find, and I'm sharing here in the live chat. And from this Zoom session also you may be able to get access to the Academy Mentorship, which is only exclusively available from the Zoom session. Those who will be attend the Zoom from there, if you are dedicated, you can get access to the mentorship, where also can access my trading tools, indicators, as well as the strategies that I am using every single day. We have indicator, also provide us directly trade alert from TradingView that I was using, still using. That also helps to understand how the market moves. Trading is easy if you have the right tool and the strategy. If you look at the 5 minutes chart on gold, you can see that quite a few trades with this tool. This is a TradingView indicator, especially when the market is trending. So you can see that I have direct entry from the TradingView. I can connect it, or I can take this alert little higher time frame, then I can use it with risk management. This is a tool that is mostly suitable for trend traders with a higher risk reward. Thank you very much. The 15 minutes candle look like a liquidity candle when both direction. Now can we see probably see a big one in the single direction? So the 15 minutes, especially if you are using this trend trading tool, look for the zone where there is a higher time frame aligning. And this tool also designed to consider the higher time frame trend as well as the lower time frame trend. Okay, so to get access to the tool, you only need a free TradingView account where you can get access to the indicator from me directly on your chart. Okay, it's getting up here. And also this indicator you can use on, if you are using on even on the BTC USD on 1 minute chart, it works very well as long as you do the risk management. You can see that here you need to use based on the lot sizing and all the tools that you need to use. 1 minute or 5 minutes, it's a trend trading strategy, so it only provides the best results in a trending market when the market trends. So if you look at USDJPY, this trade it's worked out perfectly. Best massive move. This one also worked out perfectly. This one might be break even because it's 3-to-1 and 5-to-1 reward to risk. This one also worked out. This one also worked out. This one didn't. This one didn't. So it's a 3-to-1 or 5-to-1 reward to risk strategy that you need to apply. And all the entry, stop loss and take free, you also can set alert on your TradingView, so it's gonna give you alert on your mobile phone or email that you need to enter any trade. Thank you. Okay, now here you can see 15 minutes. 15 minutes here. Yeah, this is a this candlestick is, there is a liquidity trigger because it has crossed this resistance, which is pretty stronger level of resistance. The market grabbed the liquidity and could come back here, that you could see in that direction. it's not gonna that far, but we could see that breaking out here can provide an opportunity to sell in that direction. Could we now see a big sell move with NY open? I would say that if you look at the intraday, this is the sessions high, right? And there is previous sessions high here. And to go for a sell will be a very good area if the market goes and break the sessions high, which you could see in this move. If the market takes that up, that's gonna bring a significant selling opportunity. This is what we are looking at here. And is there any other news that we can pay attention for the potential move? Because the market sometimes goes entirely different direction with any sudden news came out. You see that there was a news for negotiation in the market. Oil dropped, gold bounced back up. So because if the market is moving for this technical perspective, which we could see, but if the market moves due to the fundamental or sentiment, suddenly something has happened, shifted the sentiment, it might start to get bullish here. At the moment, still chances for that move. Now, with quite a few candlesticks, so it's once it get an overextended above this trend line, we can look for another entry. We do open few positions sometime one position, but the goal here is to keep the high win rate, which is important to look at. getting rejection of this key level, and we can see the market is eventually from that zone, it's breaking that low that you can see in that area, and you want to see that overextension above before it eventually, you see there is a long wick. Do you think 4100 was as low as it will go? 4100. Now today's low that if we look at, I would say for could be today, it could be including tomorrow, but here it might come down further, but the more probable point is at 4300. Beyond this point, the market might get a struggle. Moving a sideways slowly may come or may bounce back again. We had one entry earlier. The market is now on a little higher volatility situation. We had our earlier trade and we have closed it and looking for the next entry. And if you look at the intraday, 25 minutes, this 4 hour candle closing, and I'm looking to see a break of this session's high. So if you look at the session's high is here at 4456. So waiting for the session high to break, but you can see the market is breaking below here without break of the session high. So this is the 1 hour price action. This way, I think, okay, that's fine. You know, FOMO trading is not a good idea. So, but we are looking at, we had one trade, and so I would encourage you, everyone, to join in the beginning of the session, because when you start, we do have few positions open, and at the end also sometimes we open, but you know, I always remain cautious to keep the high quality trade, to keep the winning positions. So if you look at here, you see when the market gives a high probability positions, this is where you want to enter to keep our winning rate higher, as we are in fact every single day. But this is a potentially a false breakout, and we might see that eventual rejection of this level here. But I'm looking at in that area for this market to break below. I did that 15 minutes before the Trump's tweet about peace negotiation with Iran. There was a massive spike in volume. And then why didn't you enter at 4451? Because I was waiting for breaking 4457. So you see series of lower high. So a point here, there's another one. So to have that high probability trade, what we need to see that is broken. You see the market is going back again. So if that series of lower high breaks, it brings a high probability entry. Read the 15 minutes before Trump's tweet about peace negotiations. Yes, usually with tweets from Trump's get the market really. There is a spike. It's because there is a lot of decisions that investor and traders wait for to see which way is heading, because it's very important as there is some important decision coming about the war and peace negotiation. These are some topic that entirely changing the market condition, right? Because if there is war, the market will move in one way. If there is no war, the market will move the other way. So these decisions as a trader and as an investor is essential to look at. So that's why I keep eye, and if you really want to have an informed trading decision, because becoming a trader is becoming whole, right? You have to have all pieces together to make an informed decision. To make an informed trading decision, you have to have all the information. You don't have to know everything, but the major event, what is happening at the moment, at the top few, the event that's coming up. Okay, for example, now what are the major news that is moving the market? Iran war or Middle East war, Russia-Ukraine war, and some of the global economic events, right? So you need to have a track of those events, that where they are heading to. So these are the catalyst for the market movement. 46575 should be a great selling area. 4475, 4465. Yes, so this is the market. You can see it breaks again, and there's a 4-hour candle close coming. The market may not go that far, but I think the way it is heading, if it goes before the candle close in the next 20 minutes, it's gonna be a huge selling point for us to look at. But I'm always, you guys see that I don't need a lot of trade. We have few positions, we have few strategies. We are also running in an automated system, using our strategies consistently growing. The most important part here for me is to maintain the quality rather than the quantity. That's why you make a big difference as a trader, right? So let's see where it is heading now. the significant volatility that you can see in that area. And so with this support, it rejected back above, right? So interesting. Now with this rejection, we might see the markets coming back again or going for another retest. This is what I'm looking at to see if the market breaking that high with the 15 minutes candle close. See how the market is got this rejection. So that might be going for liquidity sweep here, going back up again, cross this high. We might see that again coming down back below, depending on how the market is doing. But at the moment, I would like to wait for the 4-hour candle to close. That's a massive breakout that you can see. We'll see that where it is heading. But if you look at the 4-hour, right, and if the market breaks this high, which is 4463, and then candle close back below, we have 15 minutes for this candle to close. Now this breakout could be very, very crucial, because that move, how it is manifesting on DXY downside. So going back to that level 4465 and then coming down and candle close back below, it will be massive selling opportunity here in that market. Okay, now the market is little volatile. Don't catch the water when it is hot. Let it settle down and then we will be re-entering again. And I had one trade and I believe you guys enjoyed the trade. It's Thursday. Tomorrow coming up another session. My plan here will be waiting the 4-hour candle close to see if this market going up. If this is my plan here, if this 4-hour candle close, with a big green candle, I will not be entering. But if it goes up and then close above below here, that's a selling. So if it breaks this high and coming back below, it's a selling pressure. We will be able to sell with the 4-hour candle close in 15 minutes time. But due to the time limits, I'm ending this session. And I believe you guys enjoyed. We had one successful trade in this session, and we'll be looking forward to more. Tomorrow coming up Friday, and we'll be trading in this live session tomorrow as well. And I believe that you guys will be here, and we trade here every single day. And also don't miss out to join the Telegram, which is, you can find link below this video. Sunday there will be an extended Zoom discussion, where from that Zoom discussion, for those who will be joined from this free Telegram channel, some of the members might be able to access my trading strategy, my courses, as well as all the automated system that I have to trade every single day. That being said, thanks for joining, and I'll see you again very soon, trading live. Until that, stay well, stay happy.